Good morning, all. Today, in our continuing lessons on the awareness of frauds, I would like to briefly explain about the most important and the biggest frauds, which actually account for a small percentage in terms of number of such frauds, but the volume of the losses and all is uh, is almost 90%. For example, if 10% are such frauds and 90% are various other frauds, the losses or the loss of revenue or the fraud element concerned is 90% in the case of those 10% financial statements frauds. Whereas in the 90% of the all other things, it may be about 10% or so approximately. So point is, they incur huge, tremendous losses due to corporate fraud. First, you should understand what is a financial statement fraud. Before that, you should understand what are the financial statements. The financial statements, as you know, are basically the balance sheet, profit and income statement, the profit and loss account, and the cash flows. So, which are presented along with the audit report and other relevant information in the at the end of the year. So, before we go further, it is just pertinent to just understand why they do it. They are all the top management people, well established, and they have all the comforts of life and all that. Why they do it? Possibly, it could be great. The more you have, you want more. And the ability to tell lies. This is a fundamental thing. Those people have the ability to convince the others or convince their subordinates, convince others, convince the banks by uttering lies. So they have that ability to lie and no remorse. They do not have no remorse, no sympathy, no concern about the losses that are incurred by shareholders and the public or anybody in the thing. And most important, no guilt. They don't feel guilty. They keep on justifying till uh, all evidences are put forth and proved, and then they are gone behind the bars. Till such time, they keep on trying to lie. So now, coming back to the financial statements and all this one, see, what is done is the financial statements and the balance sheet, P&L account are all are the entries in the books of account are cooked up. That means the journal entries or the adjustments and all are made are cooked up. Fictitious revenues are shown, fictitious expenses are shown, inventories are inflated, and then even capital is written off as revenue. And you see, there are multiple ways taking unrecognized revenues. All this is done, and whereby the balance sheet and the profit and loss account show a view that is not the correct view. So, and as far the auditors are concerned, they are satisfied. They see they do the balance sheet audit and all this one, and whatever evidence is shown. And unfortunately, in many of these big fraud cases, there's an element of collusion between the management and the auditors. In several cases, it was proved. Okay, and even the concerned auditor or somebody also taken to task, and that's also a different thing. The point to note is the financial statements, the balance sheet, P&L account, cash flows, all these things are given a rosy picture when it is not so. By cooking the books, by fudging the books, by false entries, and all these various methods, inflating revenues, inflating expenses. Um, and so this is become a big thing, and the bankers are presented, financial institution bankers are given such statements, wrong cash flows and all that, and bankers and all only see whether they have all their bunch of requirements. That they have given all these A, B, C, D, their checklist. Once the checklist is there, it is there, and it's a big corporate. Well, the job is done. They part with the loans or facilities or whatever may be the thing. And as we are seeing, and afterwards they run from pillar to post. That's what is happening, unfortunately, despite all the controls. So, these financial statements are presented by cooking up the books of account, and that is a fundamental thing about these uh, financial statements frauds. See, the thing is, mainly many of these are occurred where, even though for the sake of statutory requirements and all, there's a big board of directors and all that one. Always there is one person, the top man, who runs the total show. Everything happens of what he says down the line. So that is the biggest problem in this. Uh, Afterwards, one top man is some accomplices only are all uh, held up, and evidence is produced about their involvement and all that one. So that's how it is done. And we have seen the top for these cases. In the case of there's Enron, Tyco, Toshiba, and our Indian biggest thing, two the biggest thing, Satyam Computers, the biggest scam. And then there is a recent one that is still ongoing, and the government and the agencies and are trying to bring the culprits to the thing, like that Punjab National Bank fraud. Nirav Modi and Mehul Choksi and all various people are alleged to have committed all these things. And we do not know about the Kingfisher case. Hmm? Still, it is under investigation and things like that. So, in all these cases, what happens? They just borrows money or directs the funds collected for the one purpose to another purpose, uh, and then mislead the shareholders, mislead the public, mislead the bankers, till the bubble bursts. In Bernie Almada, the biggest Ponzi scheme, is the biggest con man, who was given at the age of 70, 150 years for all the frauds that he has given of 65 billion or so, which we discussed in some other things. So, briefly, this is the concept of financial statements fraud is the manipulation of the books of accounts through these fictitious entries and all this one, and then presenting the annual accounts in a rosy picture, showing profits when there are losses, things like that. And always these statutory auditors, they may not be able to find out. The internal auditors, they have to do what the management tells at that bottom line. Hmm? Things like that go on. And yeah, they may be filing their returns and all this with the statutory bodies and all that one. Hmm? So the thing is, they simply escape till the bubble bursts and the things comes up. And why financial statements are very, very important? Because through the financial statement, the shareholders will know what is happening, the public will know what is happening, the other any persons who wants to collaborate with the company or to come into a joint venture or acquisition or things like that. That is to fellow corporates. It is useful to the bankers. They are useful. Financial institutions, they are useful. Tax authority, they are useful, and it is a listed company to the stock exchanges. So the whole year's transactions, the cumulative effect is the financial statements. So when there is fudging of books, when there are alterations in the entries with the false evidence and supporting entries and all that one, the final product, the financial statements, will be nothing but lies. Okay, so that is what is about the thing. Of course, there are some red flags like If somebody really deeply goes into that, afterwards all these things will come out during an investigation, that there are negative cash flows during this period or whatever. Then compared to peers, there is wide fluctuations in the ratios and the other things, gross margins and all that. And even compared to previous year's figures also, there may be wide variations of certain important ratios and all. And there may be a history of violation of some stock exchange things and all that one. And basically, by comparing the ratio analysis of various current ratio, debt equity ratio, and so many other ratios, and then these things comparing with the peers and comparing the previous year and all, at times they do show some indication. But in reality, unfortunately, till when there's a fraud, and then when the investigation occurs, and till the such time nobody goes deep into this. That's a whole problem also. So, in brief, the financial statement fraud is to fudge the books, hook up the books to show a better position than what it is of a corporate. And these financial frauds, even though by percentage wise they are less in number, the, they end up with the biggest corporate loss, fraud losses due to their fraud, and several people are affected by this by relying on them. The financial institutions, the banks, everybody is affected. And basically, the these corporates are generally controlled by one main person, and he directs what is to be done and what is not to be done, how things are to be cooked up, things like that. So, and actually, I already made a presentation of the PowerPoint presentation giving a brief description of those cases. Also, what happened exactly in the case of what happened in Toshiba case, in Enron case, in Satyam Computers case, and PNB case, and all these. And because it's very exhaustive and detailed. But whenever we are relying on the financial statements and all, it is always advisable to go a bit more in depth, and take the help of financial professionals who are not connected with the company. Okay, and try to analyze their previous things and all that. And actually, the onus is also on the auditors to have an independent view and all that one. But rather unfortunately, it may or may not happen. And all the big cases that have come out are the auditors either have. There is sometimes there is negligence on the part of the auditors. Sometimes there is hand and glove with the management concern and things like that one. So, with this, I conclude my brief introduction to the financial statement frauds, which is happening day in and day out. And we move forward with more incidences of these frauds and other types and all that one. And so that it's a continuous process, and everyone should know what is happening day in and day out. And so, as I already explained in my earlier video lessons and others, my objective is to simply educate the public, bring to the notice of the public what are the various frauds, how they are normally occur, what are some basic precautions one has to take, and all these things. So I'm quite sure these things will help the public and one and all for taking better precautions. As always, it is said that forewarned is forearmed. Okay, best of luck and good day.